Imagine standing in the middle of Australia's interior. The sun is brutal, the land is cracked and red. Nothing grows easily. Everything seems hostile to life. It looks like the last place on Earth where prosperity should exist. Yet beneath your feet lies one of the most profitable economies in modern history. A country with a small population, massive empty land, and harsh geography somehow became one of the richest nations per person on the planet. For nearly 30 years, Australia avoided recession. While America crashed in 2008, Europe struggled. Japan stagnated. Australia barely flinched. So, how did a former prison colony turn itself into a global financial powerhouse? The answer isn't innovation, it isn't genius, it isn't Silicon Valley thinking. It's something far simpler. Australia learned how to turn dirt, houses, people, and geography into money at scale. Let's break it down. Australia's economic personality was shaped very early. Not by inventors, not by bankers, by prisoners. The country began as a dumping ground for British convicts. For decades, the economy was basic: sheep, wool, farming. Then in 1851, everything changed. Gold was discovered, not tiny flakes, not dust. Huge nuggets lying just under the soil. Suddenly people abandoned jobs, cities emptied, ships rerouted. Everyone started digging. Within years, Victoria produced nearly a third of the world's gold. Melbourne exploded into wealth. Australia became one of the richest societies on Earth, and something important happened psychologically. Australians learned, you don't need to outthink the world if you can outdig it. That lesson never disappeared. While other countries focused on factories and technology, Australia focused on what was under its feet. And unlike many resource countries, it didn't completely collapse. It built courts, banks, infrastructure, regulation. So when gold ran out, the system remained, and something bigger was waiting underground. Gold made Australia rich. Iron ore made it unstoppable. In the early 2000s, China began the largest construction boom in human history. Cities, highways, bridges, power plants, apartment towers. To build all that, China needed steel. To make steel, it needed iron ore. And Australia happened to sit on some of the largest high-quality iron ore reserves on Earth, especially in Western Australia. Perfect timing, perfect location. Then came 2008. The global economy collapsed. Banks failed, markets froze, trade slowed. Everyone panicked, except Australia. Why? Because China responded by spending trillions on infrastructure. And Australia was ready. Massive automated mines, driverless trains, 24/7 ports. It became an industrial money pipeline. Today, iron ore alone brings in well over $100 billion a year. One rock became a national pillar. That income protected Australia during global crises. It was an economic shock absorber, but it came with a cost. When mining becomes too successful, it creates a strange side effect. Economists call it Dutch disease. Here's how it works. 1. The world wants your resources. 2. They buy your currency. 3. Your currency rises. 4. Your exports become expensive. 5. Manufacturing dies. That's exactly what happened. During the mining boom, the Australian dollar became extremely strong. Great for tourists, terrible for factories. Car manufacturing collapsed, electronics disappeared, heavy industry vanished. By 2017, Australia had no major car factories left. It became the only G20 country without one. The economy shifted too. Mining, banking, real estate, services, not production, not innovation. Just extraction and finance. Australia earns rich country money using a low-complexity model. That works until it doesn't. Mining is the first engine. Housing is the second. And it might be even more powerful. Australia turned homes into financial assets. Not shelter, not communities. Investments. Over time, property became the main way people built wealth. Government policies encouraged it. Negative gearing. Losses on rental properties reduce your taxes. So losing money is rewarded. Capital gains discount. Only half your profit is taxed.
Wow.
So speculation is encouraged. Together, they created a perfect storm. Investors flooded in. Prices rose. Banks lent more. Buyers borrowed more. Repeat for 30 years. Today, Australian housing is worth around $10 trillion. More than the stock market, more than pensions, more than GDP. Housing is the national balance sheet, but it's built on debt. Household debt is among the highest in the world. Many people aren't wealthy because they earn well. They're wealthy because their houses inflate. Young people struggle to enter. Parents help. Inequality grows quietly. The system survives because it's too big to fail. If prices fall, banks suffer, economy slows. Governments lose elections. So governments protect it at all costs. When you can't grow productivity, you grow population. Australia mastered this. It runs one of the world's most selective migration systems. Young, educated, healthy, skilled, welcome. Others, no. This isn't charity, it's economics. New people mean more renters, more buyers, more workers, more taxes. GDP rises instantly, but per person income doesn't always. If population grows faster than the economy, individuals get poorer even, while the country looks richer. Australia has used this trick for decades. International students are part of it too. Education became an export. Students pay high fees. Work part-time, often stay permanently. When borders closed during COVID, the system wobbled badly. It revealed how dependent the model is on constant inflow. Australia's quiet genius is superannuation. Mandatory retirement savings. Every worker gets money deposited into an investment account. You can't opt out. Employers can't avoid it. Can't touch it early. Today, super funds control nearly $4 trillion. It's enormous for a country of 27 million. This money must be invested. So every month, billions flow into banks, infrastructure, mining. Global assets, it stabilizes markets, softens crashes, supports companies. During crises, super keeps buying when others panic. It acts like a national investment engine. Australians technically own much of their economy through funds, not directly, but collectively. It's accidental capitalism with shared ownership. For most of history, Australia's biggest problem was isolation. Shipping was slow, trade was costly, influence was limited. It was too far away. Then the world shifted. Economic power moved to Asia, China, Japan, Korea, Southeast Asia. Suddenly, Australia was close to growth. Its distance from Europe didn't matter anymore. It became near demand, far from conflict, stable, reliable, perfect for trade. For heavy commodities, distance matters. Australia became the cheapest reliable supplier. And in an unstable world, boring reliability is valuable. Australia also earns money from its location politically. It sits between East and West, close to Asia, aligned with the US. From Washington's view, Australia is strategic real estate. It's a giant stable base in the Indo-Pacific. It hosts intelligence facilities, military rotations, joint training, unoccupied, integrated. The UK-US strengthens this further. Nuclear submarines, defense industry, technology access. It locks Australia into Western security networks. That brings influence, protection, and investment. It's geopolitical insurance. So what's the real story? Australia didn't get rich by inventing the future. It got rich by selling rocks, inflating houses, importing people, forcing savings, renting geography. It played its cards extremely well. Every shield has cracks. Mining depends on China. Housing depends on cheap credit. Immigration depends on public support. Super depends on markets. If one weakens, pressure builds. Critics say Australia risks becoming the lazy country living off inheritance instead of innovation. They're not wrong. Australia ranks low in economic complexity. It makes few advanced products. It relies on old advantages. But there's the counterpoint. High wages, healthcare, stability, safety, strong institutions. When life is comfortable, urgency fades. Maybe Australia isn't lazy. Maybe it's rational. It recognized luck, then built systems to monetize it for decades. Luck doesn't last forever, but if you manage it well, it can last a very long time.